Welcome to today's More Important Analysis videos on Wednesday the 15th of February with me, Richard Perry, market analyst at Handset Markets. We've got a strong dollar that is developing today, and risk appetite is positive as well. That's come on the back of these comments from Janet Yellen at her congressional testimony yesterday. She sort of alluded fairly reasonably hawkishly, not massively. There wasn't a huge sort of divergence away from where we'd already realised the Fed was positioned. Live meetings going forward, and sort of comfortable with how the sort of inflation and employment situation is, but also the fact that it seemed as though that perhaps Yellen was just trying to increase expectations really for a rate hike. Sort of seemed to be fairly low, didn't it, going into this congressional testimony, around about sort of 15-20% on the March expectations. It's sort of moved out a little bit from that, but still I think that the Fed is unlikely to hike in March, considering where the market is priced. But there's no sort of negativity really surrounding this congressional testimony. She's been fairly positive really, and sort of talking about how the fact that holding off from hiking rates for too long would be seen as unwise, and certainly we've seen treasury yields and the dollar pushing out higher. Look at this upside break on the dollar. That's sort of moved significantly above 101 figure yesterday, which I was seen as a breakout really. That sort of really does end that sort of corrective move and confirms the market sort of increasing now. You look at the 10-year treasury yields pushing out higher, also on the 2-year, and you look at the spread as well. That started to rise again. Generally that tends to drive the stronger dollar, that spread. So that's generally seen to be as a positive move for risk appetite, and also obviously the dollar. We're now sort of breaking three key levels on against the euro, against the yen, as this improvement in risk appetite is taking hold. Now, in terms of what we've got to look forward to today, we're still looking at the UK. Actually, we've got UK unemployment data we've just had out for the UK. Let me just show you UK. Sorry, that's the inflation data from yesterday. Let's zoom up here, and we've seen today we've got the average weekly earnings, which disappointed, interestingly, 2.6% on both the headline and core, which is ex-bonus on average weekly earnings. That is interesting, because that's a miss, and that just suggests that real wages are tightening, because we had inflation rising yesterday, but weekly earnings dropping. That's sort of not really been that great for sterling. Sterling's dropped sort of 20-30 ticks on the back of that. And that is something to factor in today, but we are seeing a stronger dollar. We've got a load of US data this afternoon, starting off with inflation at 130. Headline inflation expected to rise to 2.4%. Core inflation expected to fall slightly to 2.1% on CPI, which will be interesting. Fed manufacturing staying around the level of last month. Retail sales will be an interesting one. That is expected to come in ex-autos at 0.4% positive on the month. Now that would be the continued improvement in retail sales on the year-on-year basis towards sort of 4% area growth on the year. Industrial production, again, just coming back towards flat really, so nothing really doing there. Capacity utilisation expected to stay around 75.5%. So interesting that what we're seeing in these markets today as this dollar strength takes hold. Now my chart today is the Aussie dollar. Now Aussie dollar has been consolidating the last sort of week or so, really consolidating, and that comes despite, as I show you, this dollar recovery that we have in place. Now yesterday's candle was really interesting, because you had initial sort of initial move to the upside, failed at the resistance, but then dropped back on Yellen, but then bounced into the close, and that bounce into the close has continued today. So that's coming in spite of this dollar strength that we're taking on. You look at the momentum indicators, positive RSI, holding nicely above 60. MACD is basically flat, but still positive. And you look at the stochastics, which has started to tick higher again. I think this is sort of possibly even positioning now for an upside break, which is really interesting considering how the dollar has strengthened. So the Aussie is still remaining very strong on the performance basis. Again, it's outperforming the major currencies today. It looks as though it possibly could be coming out, certainly if it breaks out, to a test of that 77.77 November high, which would be under pressure if that were to be the case. Now that is a key high, coming back several months, all the way back to March, which is where we get the 78.35 big sort of resistance there. But it seems as though this sort of dollar is continuing to strengthen. The Aussie dollar is continuing to sort of hold up well, despite the fact that we've got this this dollar strength. And this is sort of coming as commodity prices continue to recover, and that obviously is a boost to the Aussie economy. But certainly the Aussie is an outperforming currency today, and certainly looking as though it's going to pressure on this 77 big figure resistance, which has been in place for quite a while, certainly in the last couple of weeks anyway. So I wish you good luck in your trading today. Let's just show you the hourly chart very quickly. Nothing majorly you get from that, still ranging, but it's sort of positioning for an upside break possibly here. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.